Hi, I'm Mike Cintolo, Chief Analyst of Cabot Growth Investor and Cabot Top 10 Trader, and I'm here with your Cabot Weekly Review, and I'm recording this on actually late Thursday afternoon because Good Friday is a holiday in the market, and at Cabot we'll be back at it as usual come Monday. So I would qualify this week as disappointing but not decisive. Coming in we had growth stock resilience, which obviously is important to me, but also just the market had been acting better since the banking crisis. The broad market was still iffy, financial stocks not so good, but some improvement there, some resilience. And then all of a sudden, not all of a sudden, but starting late last week, especially coming in this week, we saw a rotation out of growth. We've seen things like consumer staples and big cap healthcare, in other words, defensive stocks, perk up, and that sort of thing. And there's been some slippage and some sloppy action. Now, I wouldn't say it's decisive in the sense that, nothing's really changed with the top-down evidence. Intermediate term trend down on balance, but kind of mixed with the indexes. Growth stocks have pulled back, but not really broken much support. Kind of more sloppy than intermediate term abnormal, I guess I would say. So we haven't really done anything within the context of being relatively cautious anyway. In Cabot Growth Investors model portfolio, we're still playing it about halfway, about 50% in cash. Pretty much everything we own have taken on some water this week. But everything we own is still above 50-day moving averages and some key levels. So I think we'll just take it as it comes. Just to be fair, we come in next week and we get financial stocks to crack. We get growth stocks that are all, not all, but many are sitting at key support. We get that to crack. We get some of these big cap indexes to start to crack, which have been the ones kind of holding up, quote unquote, the market. Yeah, you could be looking at something a little bit ugly, but that's a lot of ifs. Okay, right now we still have a lot of things acting well, a lot of stocks acting well, and even ones that have taken on water are kind of more sitting at support than completely acting abnormally. So right now, I wouldn't be pushing the envelope, but I also wouldn't be selling wholesale. Like I said, we still think that 50-50-ish balance here makes sense in a portfolio, at least a growth stock portfolio, and we'll see what's to come here after the long holiday weekend, okay? All right, let's hop on the charts. As always, I'm using a product called MarketSmith. You can learn more at marketsmith.com. It's a product of Investors Business Daily. So start with the NASDAQ here. And again, if you didn't know anything this week and you just own the indexes or just followed the indexes, nothing's really changed. The NASDAQ really, kind of had this ramp. And so from a top-down perspective, you're like, oh, we could have a little bit of a pullback. And that's what we've seen here over the 4 days, okay? And it looks totally normal. And to be honest with you, you give me a few more days here, I'm not pattern guy with indexes really, but cup with handle or whatever you want to say, you're starting to get the 200-day line start to kind of trickle higher here. So, we'll see how it goes, but that's not so bad. S&P 500, same sort of thing. Okay, the top-down evidence, a little bit of a pullback here this week, but no big deal. You do dig in again with the broader indexes. The broad market just looks much sicker, not only on a absolute basis, but even this week. The IWM kind of rallied right into this 25-day line and got rejected pretty hard. Now, it's still kind of well above its prior lows here during the banking crisis. So whatever, nothing's really, like I said, nothing's really changed, but you're kind of seeing, more of that action. MBLY, which is the mid caps, a little bit stronger, but again, kind of a pretty strong rejection well below the 50-day line. And the New York Composite, a little bit stronger here. But again, kind of unable to get through this 50-day line yet. Now, on the positive side, I would just say the way our sort of intermediate term trend model works is we'll be dropping off some of these days next week with 25 trading days ago. So if the market or the indexes can kind of hang in here and accelerate higher, whether it's next week or the week after, the intermediate term trend could turn positive again along with the longer term trend. And if we start to get some earnings gaps, all of a sudden, you're cooking with gas sort of thing. So I'm certainly not making it out to be like it's a disaster this week or anything like that. I would just say it's been a little bit, just sloppy and disappointing, okay? You're still looking at, this is KRE, which I've mentioned I wrote about in Cabot Growth Investor this week. It's really the sector on the margin. Last year was kind of ARC. Now it's kind of this KRE, regional banks. Can't really get off its knees. Yes, it's up today, but you can just see it's just kind of, basically crashing and can't go anywhere, okay? So that's a little bit of a worry. And if you look at like an XLF sort of thing, same sort of pattern, not quite as bad, but still well below even the 25-day line. And then even cyclical stuff, you can look at a lot of different stuff, but this is the Dow Transports. It's not a disaster, but again, you're clearly in a intermediate term downtrend or sideways to down phase. I think coming in today, it was something like 22% of NASDAQ and 32% of NYSE stock. I forget the exact percentage, but something like that. Only that much were above their 50-day lines. Okay, so the broad market looks a lot more like, most stocks look a lot more like the IWM or the MBLY than they do, the NASDAQ and the S&P 500. And part of that is the Apple Microsoft thing, but part of it's just, some of the growth stuff versus really just all sorts of cyclical, financial, industrial sort of stocks that have, getting worried about a recession, so to speak. Okay. The other big thing too, which if I can get the chart working here, I mentioned this last week, how it's not the end of the world. And again, it's not outperforming everything, but this is the XLP. And I'm never a huge fan. I mean, if everything is ramping and it's a kickoff to a new bull market, I don't really care. But when we're still in kind of choppy conditions and you just have the XLP kind of starting to ramp here, and then you have something like the XLV, which is kind of mega cap, Johnson & Johnson, stuff like that, healthcare, safe, reliable, slow growing, cheap, dividend paying. When you just kind of start to see some of this, it's not, again, it's a secondary indicator. Doesn't mean you should go sell all your stocks, but it's just telling you like, okay, like at the very least, as I wrote in today's issue, the on again, off again environment is still with us. Maybe that changes next week. Maybe we go way down, maybe we go way up. But until it does, like we're still kind of in this washing machine type action where things are looking good for a week or two or three, and then they kind of reverse and rotate out of them sort of thing. So just seeing some of these defensive things, not my favorite look, not the end of the world, but not my favorite look, okay? And at the same time, you have something like this is the Russell 2000 growth, which had been doing better than the overall Russell 2000, but got hit pretty hard this week. Semiconductors still look fine, but again, now you're starting to get some selling on strength. We're kind of seeing that bugaboo show up again. So we'll see how it goes. Again, it's sort of a mixed environment. Some things are okay, then the things that look okay are not okay, and other things look better. It's one of those. So hence we're holding a decent amount of cash, but we're still trying to give some things that are kind of in the 2 steps forward, 1 step back pattern, a chance to breathe and pull back and shake people out and then eventually resume their uptrends, okay? So let's see how it goes. Now, when it comes to individual stocks, I think the biggest thing with growth anyway, like I said, there's just a lot of stuff that's, I would say, is key intermediate term levels. So this is ACLS, ACLS, and the reason, to me, these are kind of, it's hard to say they're total new leaders when A, they're not the most liquid thing. This is kind of a small cap name. And B, it's hard to say like we're in some raging bull market where we have these defined leaders. Nevertheless, chip stocks have been strong. ACLS was really the first one to break out of this, year-long choppy phase during the bear market, and it went bananas on the upside. Now, big picture of the stock, nobody's going to say that this drop right here is going to outweigh this entire advance. But on an intermediate term basis, the stock has been, you can just kind of see it's been hitting more and more resistance. Of course, this coincided with a choppier market and the banking problems and all that stuff. And now we've kind of pulled in here on light volume. We'll see how it goes. I would just say, again, you come in next week. I don't want to give specific advice on this video, but, you start to see this thing down. You have one of these days where it's down like 7% and it's a complete blow up. That's not only bad for the stock, but it would be kind of a little bit weird to see a fresh leader completely implode. That's usually kind of a sign for the market. Now, be that as it may, right here, I mean, for all I can know, it's a great buying opportunity, right? It's right at the 50-day line for really the first time. It's already had a few shakeouts in here, so on and so forth. So still looks okay, still on my watch list. But again, it's one of those names that's kind of right there, okay? Allegro Microsystems, ALGM, similar sort of thing. This is more of a recent IPO, big IPO breakout on, you can just see the huge volume here. And it had a good couple, actually had 3 days in a row here if you look at this volume cluster, really on the breakout on earnings, So, maybe it shakes out a little bit, but again, it's kind of that first test of the 50-day line, which whether you own it, whether you don't, whether you're looking to own it, whether you're not, to me, it's kind of an interesting tell in terms of tech stocks, chip stocks, stuff like that going forward, okay? Just running through other names, Samsara, most of these I've mentioned before, if not all of them, IoT. Again, you had this tedious pullback, started to resume, then it got hit, yesterday it was down, whatever, a few percent. Doesn't feel good. But when you look at the overall thing, it just looks kind of like it's kind of chilling out here between, call it 18 and 21, that sort of thing. So let's just see if it can continue to hold up. Does it find support as the 50-day rises or not? Okay, but that's one that I'm still watching on my watch list. Palo Alto Networks, some cybersecurity. We started to see some start to perk up, and then again with the growth stock rotation this week, some have been hit. But overall, again, this thing kind of approached the 200 level, which is kind of round number resistance, but also its old highs, So a pullback wasn't surprising. You get kind of these 3 sharp days, but no volume selling on it. Looks fine. PANW just to the 25-day line. Shift 4, FOUR, looked kind of picture perfect, honestly, coming in this week. You had this, big earnings move, and then you had the banking crisis. Well, what did the stock do? Well, it pulled back, but actually tightened up into the 10-week line. Then you had volume accelerate as the stock goes up. I mean, not that you have to be this close to the stock, but it's always good to see price volume sort of moving in concert. And then the stock just kind of quickly turtles back into its shell. But, still in an uptrend, still looks fine. I still like it, but, let's see how it goes into next week going forward. 10X Genetics, this was one, I don't know if I've mentioned this before recently. This is TXG. Kind of have a little bit of, if you're familiar with Illumina, it's kind of another Illumina type story, but obviously not so good during the bear market. But it has been repairing the damage here. And this was another one that, I don't want to say tightened up because it's not tight, but it kind of shelved, in here, broke out last Friday, I think, or whatever that was, and then just kind of right back down. But still, so it's kind of disappointing if that's the stock you own or you're looking at, kind of a failed breakout, but not decisive, still in this general uptrend, still looks okay overall. It's one I'm keeping a distant eye on. Advanced Micro Devices, same sort of thing, sort of had this huge thrust above resistance, goes up 10 points, comes right back down 10 points, ballpark, give or take. But at the same time, looks okay, 25-day line. So we're just seeing a lot of these that are not great short term, but when you really step back, it's kind of like, do you really see anything that's wrong with it at this point? Especially with no real, some of them have had selling volume, but no real selling volume in a lot of these, okay? Let's see here. WYNN Resorts is another one. Good news. Again, you're seeing some of this selling on strength. So I mentioned this, how the stock's had a big run, so it maybe is entitled to a longer rest for sure, but had some good news on Macau gambling statistics for March. They released it at the beginning of the next month. And it gapped up and, just been selling off really since that opening on Monday. But again, you're kind of just hanging around here at the 50-day line, well above this banking crisis low, which really wasn't even that big of a sell-off. So that still looks pretty good. Again, you just want to see how it reacts. You come in Monday and the thing's down 8 points on some China thing, not so good, but so far seems pretty reasonable. Impinj, this has been interesting because it just keeps, it's kind of these little minor higher lows here. This is PI, and I think I mentioned this last week. Big gap here, correction. It's just been kind of slopping around here for weeks, really. But nothing too bad. Yes, it's below the 50-day by a hair, but just kind of in this range. And so, again, it's one of these things where I just keep mentioning this. You come in next week and it's not so good, but maybe it goes this way and it's pretty good. So if these stocks can all hold here and accelerate higher, it doesn't have to be next week. But, in the days ahead, I actually think it would be quite an interesting setup for a lot of these things and probably a bullish outcome. But, we'll see. They're all kind of testing key support here. And just a couple other names, Arista Networks, I think Sienna or somebody today in their group had sort of weak earnings or pre-announced. So you can see the stock's been getting kicked around. I mentioned it last week, how it just kind of, after this huge run, started to kind of break its very short-term trend. So you kind of expect some more weakness, and that's what we've seen. It's only had one day up here in the last couple of weeks, so maybe it needs more of a rest here. But overall, again, you're just at the 25-day line. You have had some volume selling, so we'll see how it goes. But Arista looks okay. And then MBLY. MBLY is kind of a little bit like Impinj that I just showed. This is MBLY, the driverless car sort of thing, Israeli company. Again, just kind of keeps trying to hold this 50-day line. Maybe it's a little bit below it, but you can just see these slightly higher lows. It keeps getting whacked. I mean, the stock moves around. I'd like to see it. To me, this is a little bit out of control, up and down 4 or 5 points every single week. But it is trying to hold this a little bit higher lows, like I said. And if it can kind of hold here and reaccelerate, so like I said, with everything else, looks good, but at key levels, okay? So that's kind of the dominant thing. I could go on and show a bunch more, but suffice it to say, it's just, from a top-down perspective, market looks mixed, growth still okay in general, Financials, not so good. Cyclical stocks, not so good. Big cap index is good. Small cap index is not so good. So it's a mixed picture. But at this point, like I said, it would be nice if we could have come in this week and really seen some stocks take off. And wow, okay, now they aren't just setting up, they're going. But of course, we're still in that on again, off again situation like I talked about, where we're seeing the rotation. So let's just see how it goes. I do think the next couple of weeks, obviously earnings season coming up, but after the holiday, if the NASDAQ can hang in here, which does count for something. I know it's big cap weighted, but let's, if the NASDAQ can hang in here and get going to new highs and carry some of these stocks that are at key support with it, I think that would be a quite bullish thing. If, however, all those stocks are damaged and the financials start selling off and this kind of follows the trend lower, not so good. Right now, it's a mixed market. You can guess which way it's going to go. If you want to, that's fine. I'd rather just stay in gear with it. It's mixed, so that my portfolio is mixed between, money market funds and a handful of exciting, potential leading growth stocks that are still acting pretty well. And let's give them a chance to see what they can do here in the next couple of weeks. Okay, that's all the time I have for today. Thanks for listening. And as always, come by again next week for another Cabot Weekly Review.